Alright, so gang, it's your boy NatureAkaNature. Alright, we back for another video. Alright, so in this video, we're going to dive in a little more about Japanese candlestick patterns. We're going to dive in, though, or, this is more for my advanced session. This video going to be on my OnlyFans, like, ASAP, like, you feel me? But, like, this is for my OnlyFans for the advanced sessions. You know what I'm saying? I do give out some of the videos for free. This is basically for your psychology too, to help with your psychology, okay, so you know what's going on. So if you see a downtrend, it's going to make lower lows, it's going to make a lower low, it's going to make a lower high and followed by another lower low. So it's lower highs and lower lows. You see how this low, this low right here is higher than this low, and it's going to make lower lows. Okay, it's going to make lower highs and lower lows. So this is a quick illustration that I made for you guys real fast, so you can see what an uptrend and a downtrend looks like. And in the market, there go the hammer. All right, I know about the hammer. When you see a hammer, it's hammering out. Literally, it's a hammer. When you see a hammer, it's a clear reversal pattern that's going back up. So I even drew the hammer for you guys. Okay, so it's a downtrend. You see what I'm saying? You're gonna see downtrend is going to be lower lows and lower highs. Uptrend is going to be higher highs and higher lows. You see how this low is higher than that low, and higher highs. Okay, so I just wanted to draw that for y'all real fast. You know what I'm saying? So you can see what an uptrend and a downtrend kind of like looks like. All right, there go the hammer. That's a clear, reversal pattern. All right, this is for my advanced sessions. But like I said, I'm gonna give you, I'm making a lot of my videos on live, so you guys can kind of see what you're paying for on my OnlyFans. So let's just get right into it. This, like I said, this is the advanced session, so don't get overwhelmed by the information. But this is the advanced session. So some of these candlestick patterns we already went over, but we're gonna go over them again. So a hammer. Alright, these are all the candlestick patterns that you're going to be really looking at in the market. So you have the hammer. The hammer is a single Japanese candlestick pattern. It is black or white. It's a black or white candlestick that consists of a small body, okay, and near the opening, and with a little or no upper wick. It might not even have an upper wick sometimes. And it has a long lower shadow or tail. Okay, a hammer candlestick is considered a bullish pattern, and it forms during a downtrend. So this is a hammer. Okay, that's one of the single Japanese candlestick patterns. This is a triple candlestick pattern right here, called a bullish inside up or a 3 inside up. So a triple candlestick pattern. We dive in on this on OnlyFans. But we're going to just give you guys a little bit, right now. So the 3 inside up pattern is a bullish reversal pattern composed of a large candlestick that's going down, followed by a smaller candlestick that's going up, followed by another candlestick that closes above the second candlestick. Okay, and it's a bullish inside up, meaning it's a triple candlestick pattern. It forms during a downtrend, and it's a reversal pattern, meaning that price wants to go back up. So when you see that bullish inside up or 3 inside up pattern formed during a downtrend, followed by 2 candlesticks going back up, it's called a bullish inside up. It's a clear pattern, triple stick pattern that price wants to go back up, and it forms during a downtrend, just like the hammer. It forms during a downtrend as well. So let's go over a few just for the advanced session. We have Hanging Man. Hanging Man is a Japanese candlestick described as a small body with little or upper shadows, and a long lower shadow wick. Hanging Man, it should occur at the end of a upper end of a trading range, at the end of an uptrend. Okay, when you see a Hanging Man form, is as you can see in the notes before, it forms. It's a downtrend, possible downtrend is coming. especially when you see a black or red candlestick following that hanging man close above the hanging man candlestick is definitely going down. Same thing with shooting star. Shooting star is a single candlestick pattern, just like the hanging man candlestick pattern. It's another single candlestick pattern that forms during an uptrend, as well as the hanging man. The candlestick is marked at the top. It's a bearish reversal candlestick. It looks like an inverted hammer, except that it's bearish. It does look like an inverted hammer, except that it's bearish. The hanging man and the hammer, they look alike. And remember that in the shooting star and the inverted hammer, they look alike. As you can see, the inverted hammer is next, and it looks alike like the shooting star. So the inverted hammer and the shooting star, they're identical, but shooting star is going to be formed at the uptrend, and an inverted hammer is going to be formed at a downtrend. Okay, but they look exactly alike, except that inverted hammer is a bullish reversal pattern, and a shooting star is a bearish reversal pattern. So inverted hammer is a single Japanese candlestick pattern, just like the shooting star, just like the hanging man, and just like the hammer. They're all single Japanese candlestick patterns. All right, so those are the basics that we kind of went over already. All right, no, OnlyFans, it's more a little advanced sessions, but OnlyFans will go a little deeper in it. So no worry. What we have right here? We have a 2-day trend reversal pattern. Oh shit, it's a bullish engulfing pattern. Bullish engulfing is a 2-day pattern. Bullish engulfing occurs during a downtrend. Bullish engulfing is a 2 candlestick pattern, occurs during a downtrend. It forms by a bearish candlestick followed by a bullish candlestick that covers the first candlestick. That's why it's engulfing. It's engulfing the previous candlestick. That's why I call it a bullish engulfing pattern. It's a 2-day trend, 2-day reversal pattern. It's a reversal 2-trend pattern that forms during a downtrend. Same thing with the bullish Hermione. It's a trend reversal pattern. It forms during a downtrend. It's a bullish pattern which occurs after a downtrend. It's called a bullish Hermione. The second candlestick is slightly shorter than the first candlestick, but it forms during a downtrend. Bullish Hermione price is established during a downtrend. The first candlestick is a larger bearish candlestick. Then the second candlestick opens and price. It's a gap though. It's a little gap between the first candlestick, but its body is containing a white candlestick. It's this. When you see this candlestick form, it's the bullish engulfing and the bullish Hermione is a little different, but they're both reversal patterns, meaning that they both form during downtrends, meaning that price wants to go back up. Then you have the bullish thrusting line. Okay, it's another 2-day continuation pattern. The bullish thrusting line, if price of the second candle opens near the midpoint, the first price of the second candlestick opens near the midpoint of this is the midpoint of the first candlestick. It signals an upside reversal. Bulls have managed to erase much of the prior loss, and more buyers may jump in and push price in a further gain in price. So this is another 2-day candlestick pattern. Like I said, this is more of our advanced sessions on OnlyFans, but like I said, I'm doing some of my videos online so you guys can actually see what you're paying for. This is what you're going to be paying for. I'm giving you guys everything that so you can be comfortable making as much money as you can in this market. Plus, you guys are going to be seeing me trade live, all that soon. So, bullish separating. It's a 2-day continuation pattern. It's also a bullish continuation pattern. It's a 2-day continuation pattern. It's a bullish continuation pattern. Then you have the bullish outside up. It also formed during a downtrend. It's a three-day reversal pattern that formed during a downtrend. This outside up is a bullish candlestick pattern, which formed during a downtrend. It's a bullish 3-day pattern. Then we have the bullish upside Takassi gap. It's a bullish 3-day continuation pattern. Another continuation 3-day pattern called bullish upside Takassi gap. It's a 3-bar continuation formation that signals a continuation of a current uptrend. Then we also have the bullish, another bullish 3-day continuation pattern called the bullish upside gap filled. And you have these, so you have the bullish upside Takassi gap and the bullish upside gap filled. It also forms, this forms during an uptrend. It's a 3-day, it's a 3-day continuation pattern. It's the upside 3 method pattern suggests of a bullish continuation of a trend. Okay, so let's see what else we got here for y'all game. Like I said, some of the advanced sessions or in my OnlyFans, we go over these in detail. So don't worry. Bullish 3-day trend reversal pattern. It's a 3 trend reversal pattern. It's a bearish trend 3-day reversal pattern. Bearish inside down. It's a 3 inside down pattern. It's a bear reversal pattern. Then we have the bearish outside down. It's another bearish reversal pattern. 3-day reversal pattern. It's kind of similar to the bearish inside down, but the bearish inside down, the first candlestick is it's a larger candlestick pattern than the first one, than the outside down. Then you have the bearish 3-day trend continuation pattern. It's a 3-day continuation pattern though. The first two were reversals. This one is a continuation pattern. It's a bearish continuation pattern, a continuation pattern. The second and third must be the opposite color of the first candlestick. Not the first candlestick. The second and third candlestick must be opposite colors for this bearish downside Takassi gap to actually be effective. This downside Takassi gap pattern shows the power of a downtrend. Bears are in control and exhibiting their strength. So, okay, we have a few more we're going to go over. We go over in deep, in definition, and OnlyFans, every single one. So don't worry. But for you guys right now, I'm just going to give y'all, the short version of it. Just for your psychology. Bearish downside gap filled. It's a bearish continuation pattern, 3-day continuation pattern. It signals that continuation of a recurring downtrend. Bearish continuation of trend. Alright, then common candlestick patterns that you're going to see. Trees at top, we have trees at bottom. So trees at top is a bearish reversal pattern seen at the top of the uptrend, consists of 2 Japanese candlesticks matching tops. One is going to be green, one's going to be red or white or black. Trees at top occurs during an uptrend. It confirms the strength of the uptrend, has likely paused or worse, has reversed into a downtrend. Same thing with the common candlestick pattern. Another common candlestick pattern, which is that's a tweezer top, tweezer bottom. Tweezer bottom is a bullish reversal pattern, meaning it wants to go up. It's formed. You can see it's formed at the end of at the bottom of a downtrend. Tweezer bottom confirms the strength of the support and shows that the downtrend has likely paused or worse, has reversed into an uptrend. Okay. Got a few more we're gonna go over and. Alright, so the 3 white soldiers, 3 white soldier pattern. It forms after a downtrend. You can see it's 3 white soldiers. 1, 2, 3. 3 white soldiers, 3 stick candle pattern. Obviously, it wants to go back. It's a bullish continuation 3-day candlestick pattern. It means it wants to go back up. So when you see 3 white candlesticks form after a downtrend, it's called a 3 white soldiers, meaning price wants to go back up. Same thing here. 3 black soldiers, 3 black crow. It's called a 3 black crow candlestick pattern. 3 white soldiers, 3 black crow, or 3 black soldiers, 3 black crow candlestick pattern. Just the opposite of 3 white soldier. It forms with 3 bearish candlesticks instead of 3 bullish candlesticks. It forms with 3 bearish candlesticks and it forms after a strong uptrend. And it indicates that a reversal is in works. Okay, that reversal, when you see that, is most likely reversal is coming. Okay, when you see 3 bearish candlesticks form. Okay, and then for last but not least, we did bullish engulfing in the beginning, so we're gonna do bearish engulfing. This is another common pattern that we kind of went over already. It's a 2-day reversal pattern. Bearish engulfing candlestick pattern. Bearish engulfing pattern is a 2 candlestick pattern that consists of a white or green candlestick following by a large black or red candlestick that is engulfing the previous candlestick. That's why I call it bearish engulfing candlestick pattern. It's considered to be a bearish reversal pattern. It usually occurs at the top of an uptrend. When you see it occur at the top of an uptrend, it is a reversal pattern. So those are like, just some of the, I know it's a lot. It's more for the advanced sessions and my OnlyFans. When we go in depth, real depth in it. On OnlyFans, this is just for your psychology. All of this is just for your psychology. So when you do trade in the market and you start making money in this market, you actually know what's going on. Oh, this is triple stick candle pattern. This is double stick candle pattern. This is single candlestick pattern. This is Japanese candlestick pattern. You know what you're doing, so you know how to make money. You know when it's going to reverse. You know when it's going to be a continuation. All right. So like I said again, whatever I can do to help you make money in this market, and you can do whatever you want. With the money, whatever you want to do with it. I don't care. I'm just here to help you. Make all this money in the market. I'm just here to help. So don't worry. I got y'all. All right. So gang, got this. Stay focused. All right. We're gonna get this money. Don't worry, gang.